Hello, everyone. We are live, and as you can see, I have a very special person here. Mr. Mass Trader himself is finally in the house. I've been looking forward to this for a while, especially that the topic this week is going to be topic talking about market structure and price action, and we have the man, the market structure man in the house who can give us a lot of pointers regarding this. So, Victor, how you doing? Welcome to the future side.
Thank you. What a warm welcome. Thank you very much for that. I'm very excited to be expanding my presence into the this part of the Fifers as well. As always, it's one big family. So I'm very excited. I hope you all watching us are as well. This week, I mean, if you haven't noticed, you might have been living on the rock, right? It
Indeed.
is it is buzzing. So it's gonna be very excited.
Very exciting indeed. I have to say, on an emotional level, Victor is the first person I went live on with for the Fivers. So I'm very happy that he's joining me here. So this one is going to be fun. This one's going to be exciting. We've had, as you guys know, some interesting news during the weekend. It's been news and news and news and news back to back. So Iran and the US have not reached an agreement. And I think we're going to see some interesting movements in the market, or maybe nothing at all. Maybe it's just going to be sideways action. And traders like me who cannot trade mean reversions well are just going to have to go find a bed to sleep on. And then those mean reversions traders are going to print. I don't know. What are you thinking, Victor?
I think it's gonna be more of the same. I mean, knowing
Okay.
Trump, you're gonna be having, moves coming out of nowhere, unexpected. I mean, just like the blockade, I didn't see that coming, right? That was
Yeah.
something Iran was doing. That was something Iran was doing. All of a sudden, the the how do you say that? Uh the defenders of democracies and freedom and liberties are gonna blockade the Strait of Hormuz.
Who that
But
was
I gotta
already
give it.
blocked. So we're blocking the thing
It
that's
was
already
already
blocked.
blocked, by
This
the way.
this
Yeah.
is
So
interesting.
I mean that, yes, that kind of thing is typical of Trump. And actually, I thought I try to be have no color in all of this. Of course, I can't vote. I'm not an American, but actually, when I read that and that sank, you gotta love the man. You gotta love the man. Trump is. I mean, sometimes I do. A lot of times I don't agree with him, but there are a couple of things he does strategically. When you think about it, I like it. I like it on a level. Blockade is not a good thing for world economy. No one's gonna. But if you think about it, I think my simple political science mind says, if you're stopping us from profiting or from going on with our business, then if we're not, if our ships are not going through, then no one's ships are going through.
Yeah,
And
he
and
he
and
he's if I could just jump in right there. He's to make a quick analogy, it feels like when you're playing a game of cards maybe with four friends and then you have that one friend who's kind of, losing a little bit whatever and then he just jumps in and just throws everything off the board. That's kind of how it feels. It's like if I'm not going to be playing well, nobody's going to be playing.
yeah, it sounds on a level you could say, it's not fair or whatever. And there might be truth to that to some level, but I think that blockade double down move, I think I like it. If you
You
think
like
about it,
it?
if you put it, I do. I have to admit, I do. I'm not fond of everything he does, but that move I like. I admire him for that. Um, I know from Euro, from EU, you would find all kinds of We already actually, UK Starmer came out and said we're not gonna be supporting any US led blockade. And I understand that's politically correct, right? Politically correct is how can you be supportive of a blockade? But I mean it makes strategic sense
It does
if
make
you're gonna
strategic
be
sense.
yeah, it does. It does. I mean, you're gonna be taking away that which it's great. I think it's great.
I mean, on a strategic level, it kind of makes sense when you kind of zoom out and stop making fun of it. You know, you think of how interrelated all the economies are, and since we're talking about futures, I mean, geopolitics really affect futures. So, on a more serious tone, if we think about the strait, Trump blocking the strait is going to block ships that are going to Asia. I don't want to name a specific country in particular, but we went to, I would say, about 140 ships a day to now, when it was kind of moving around, along, the average was maybe 6 to 12 ships, so about 1/10 of what used to go. And since now you were getting those 6 to 10 ships going to Asia, different parts of Asia, and now the U.S. kind of blocks it. It forces a lot of people's hands. A lot of people that were kind of hands off, staying out of the conflict, are gonna kind of be forced to, take part. Maybe not take part in the direct conflict, but enter the negotiation table. Put their cards on the table and kind of see how to figure it out. So it is somewhat of a brilliant move from Trump, if you think about it. Um, Now, how the other countries are going to behave, how is Europe going to behave? Europe has been somewhat standoffish. Same thing with Asia, but I have oil loaded up there, but we're not just talking oil that's not coming. There's been a lot of talks about fertilizer, and the fertilizer exports that have been blocked that are going to affect a lot of economies. So a lot of things are going to be affected by, or
Not
have been and are going to continue.
not only economies. I mean, fertilizers that you open up a Pandora box there because fertilizers they have a season with it, a season that
Indeed.
cannot be started any time of the year. It has crops harvesting that goes with a certain period, certain season of the year, and they have to be in time. If not, a whole year, a whole season is a big part of the world is not going to be getting the fertilizer for them to be producing the food that everyone needs, every country. And you know what that means when you start touching with I mean, if you touch with their wallet, people get angry, you know, period. They get angry.
Yeah.
But if you touch with their food, people
Yeah.
get crazy. You mean
Exactly.
that will bring a country, or not one, but many, like, potentially. I mean, if that were to happen, just imagine. I mean, governments will not be able to. I don't want to be all pessimistic here, but I mean, if you think about it, governments will not be able to calm down a society that
Yeah.
is not getting
An
food.
angry mob of hungry people. I mean,
Exactly. I mean,
hungry people don't play. I get cranky when I'm hungry, and this is when I have food in the house. So we can't even talk
exactly.
about, when you don't have food and you can't find food. It's not fun. So definitely an interesting play here. I'm eager to see how the markets react, but we're gonna be composed about it. And as traders, we have to look at the market and see how we can take advantage of that. So we're definitely going to be talking market structure and price action. Today, I have my futures, uh, oil futures pulled up right now. And I just wanted to show the guys and gals looking right now. Let me say hello to a few people that I see in the chat. Hello, Tinana. How you doing? We have Void in the house, who's happy to see Victor. Everybody's happy to see Victor. Nice. You got some fans in the house. I like that. I like that. We have Luca in the house saying hi to Victor. So let's get it going. Just a quick look there on oil, and then we're gonna switch to Victor's screen so we can look at what he has. I'm curious to see, but we saw here this gap from 95 all the way up to, again, we're above 100, retesting those highs. So to me, So far, that is a good probable setup if the situation continues unresolved for the rest of the week to have kind of a retest of that gap. Maybe not completely fill it, but flip maybe that last high that we have there and continue to push to the upside. Until things look a bit more positive, I don't think we're seeing lower oil prices. I don't know what your take, Victor.
I mean, it all depends what's going to happen there in Middle East. I mean, and that's so volatile. I mean, before the deadline, you saw how things in the last 2 hours changed completely. They, I was at that 24 hours. I thought, this is going to be more bombs falling on this part of the world, and before we knew it, we had, a summit.
Yep.
U.S. and Iran talking to each other. They haven't spoken in ages, decades, and I'm not exaggerating. Um, and they were talking just this weekend, and that's the kind of volatileness in the geopolitical arena, and that's going to be shown on the charts as well. So I think you asked me this before. I think we're going to be seeing more of the same.
Hmm.
Um, the market being perhaps watchful, waitful, and then running, stopping, running, and in the opposite direction, of course, and
Yep.
things like that. So it actually, if you're new to trading, this is a moment to take a step back and observe more than act, unless you really know what you're doing and you have risk under control. Because these are the kinds of movement. I mean, Trump can come in. Let's say they do have a another summit. They were a little chatter that maybe there's going to be a little another talk. Maybe if they do, that will make the market jump, almost instantly. Or I don't know. There were a couple of things that Iran was, according to the U.S., according to Trump, was not, the uh, letting go of their nuclear ambition, giving in on their materials they have, the control of the strait and things like that. What if there's one of those points where Iran says we're willing to negotiate this? That could be, a huge point, that would change the day, and certainly you will see that in the chart. And I remember about 3 weeks ago, it was on EU, but just Trump coming out, saying one thing, uh, pivotal, and that changed the market. Jumped 50 pips. Actually, it was 123 pips in like 2 minutes.
Yeah, we've
Um,
had
that
some crazy jumps.
that's 150, more than 150% the daily ATR in 2 minutes.
Yeah.
And
No, yeah, it is.
that's
It is.
crazy.
It's crazy. It's crazy. I can't remember which one it was, but I caught one of those moves fortunately while I was preparing for the market at 7 a.m. And I only caught, 1/6 or 1/5 of the move, so not even the whole move. But and I
Mhm.
think it was on the Nasdaq. And yeah, we were it was one of those days where we made like 1,000 points on the NQ and at least on the future side. And you're talking the Nasdaq moves on average on a good day 350 points. So that's three to four times the average daily move. So yeah, it can be
Crazy.
an interesting time for traders, as much as it might hurt us as in our personal lives or whatever when it comes to prices. But at least we can take advantage of that trading. So yeah. I'm seeing a quick question there in the chat, which I want to address, and I'll let Victor have his take on it. Trade with Sakib, welcome back. Good to see you. Always a good time to see you there. And you have a question related to expert advisors or bots. Do you think they actually work? Well, I have never used trade expert, quote unquote, expert advisors or bots. And do I think they actually work? Well, I can't really comment, but I can't comment based on experience, but here's what I would tell you. If I had a bot that was able to print money in the market, I wouldn't have to sell it. I wouldn't have to advertise it because it would just be printing money. That's the logic. Um, The market is different from any type of business where you don't need to advertise, you don't need employees, you don't need anything. You could just trade and get paid. So if you have any strategy, anything that is able to extract profit out of the market, you don't need to sell it to anybody else. You could just use it to your advantage and have it print money for you. And especially these days with prop firms where you could have multiple accounts, I don't see why you wouldn't be using that for yourself. So I think maybe they might work a little bit. Maybe they might work during certain periods of time if those bots are decent bots. But overall, um, I don't use them. I don't think I'll ever use them unless I create my own bot. That's my take.
I think this is a wonderful topic to talk about, Dave. You know, do they work? Yes, 100%. Yes, they do. But what are they? They're just executing a predetermined trade plan, meaning, what are we doing when we're doing manually? Are we profitable? Can we be profitable? Can a trade be? Of course. I mean, I'm profitable. You are, and many of you watching us are. So a bot is no different than that. The only thing is it's using, indicators, it's using open, close, so not hunches, and it's based on something objective. So yes, there are bots that are, or expert as far as EA, that are profitable. There are a couple of things to say, and I think you hit it on the head there, the nail that is, if for the commercial ones, the ones that you can buy on the internet, you see perhaps ads on social media. I'm not too. I'll be honest. I'm not too often on social media, so I don't know if
That's
they're
good.
very prominent there or not. But if they are, I remember back, way back a long time ago, it was on the internet everywhere, and you couldn't avoid them. Um, the commercial EAs, those that you can get for a couple of dozen of a dollar, let's say 30, 50, 100, and they promise you, an equity curve that goes to the heavens. That doesn't exist. That
Yeah.
that is exactly what you mean, Dave. If it makes a lot of that kind of money, why are you selling it? To begin with, why are you selling it? After period. Why are you selling it? That's
Yeah.
one. And two, if you're even selling it, why are you selling it for 100? Doesn't make sense.
Doesn't make sense.
So that's the first thing. However, there are edges in the market that aren't as big as they portray these bots to be actually. Um, a more sustained, let's say, making twice the maximum drawdown in a whole year. um and there are these bots, you can build them yourselves, you can, have them coded if you have a plan. And those are, much more realistic, possible to achieve. Not only that, and that's within the realm of what is possible. And I would say, um I can understand those that may have such a bot, such an expert advisor, and they're willing to, let's say, license it out or rent it or even sell it, because it's not going to make anyone rich overnight. It
Yeah.
has an edge, and it may fail, and it may make you money for a couple of years, before it fails, and that has commercial value. And if they portray it, transparently,
Hmm.
and they actually tell you everything, and they tell you where the weaknesses are, and with validate, but that's very difficult in this industry, right? I mean i mean for example, in the prop firm industry, you don't get a lot of prop firms that are like the fivers, honest, open, transparent. I hate to say it, but it's a reality. There's a lot of bad actors
Yep.
out there. So in the EA world, even more so. So it's a little bit difficult to, to find one, I would say, commercial one to be bought, that is, that's going to make sense for you to buy. However, you can. nowadays with all these EAs, not EAs, AIs models, you can actually build one yourself. You don't have to actually. You could code it if you knew, if you know how to do that. You can hire someone to code for you, but you can build one without knowing how to code nowadays.
Indeed.
It's very possible. Of course, you got to have an idea. You know, you got to have a trading plan to begin with, but it's very, very possible nowadays, very attainable, and it's actually, I think, the future. We're slightly, slowly, or perhaps not so slowly, moving towards automation in trading, in executing, maybe your own, maybe hybrid. I'm not sure, but we're already going there in many, many aspects of our lives,
Of
um,
course.
with the help of AI, and trading is not going to be any different. We're going to be having that. Nowadays everything either has already like an AI aspect to it, or is soon to have that.
Yeah. Well, to add to what you're saying, well, Trade with Sakib is saying he made one himself, which is first of all, congrats. That is very good. Doing your own thing. So it touches on what Victor is saying, where you can make yours yourself. He's saying, well, now you wonder, will it work on a real account or not? I mean, I'm execution. Oh, you have yeah, exactly. So, if you've done any type of back testing and then forward tested your strategy, you will realize that whatever you back tested doesn't perform as well, or at least it performs differently because you have to account for a lot of things. While you're forward testing, you're actually testing your strategy. So, if you made one yourself, trade with Sakib, congrats. I am happy that you're testing it out, and expect that the results might not be 100% what you saw in the back test. So what Victor just touched on, where we're going to see a lot more automation, I 100% agree with. I for myself have been experimenting a lot with Claude. I've been going back and forth with Daniel, who I see is here. How you doing, Daniel? He says, why give all free, no time to sell stuff if they work? You need no CSS on. Yeah, so Daniel and I have been experimenting with things. Everything I do is hybrid, so indicating for me to execute. So interesting world coming up. Interesting world coming up. But let's get into these charts, guys. I know you're interested. I'm gonna pull up Victor's screen right now, if you're okay with that, Victor.
Yes, go ahead.
So let's take a look at. Well, give me 1 second. Whoa. I have. Why don't I see the screen there? Give me 1 second, guys. Wait. This is trickier than I thought. Can you reshare it, Victor?
Sure, no problem.
Give me 1 second, guys. Little technical difficulty here while we're figuring this out live.
The market is almost getting ready, or actually, it's already breaking out before on NQ. That is the
Let me put
previous
the
high of
NQ while we
today.
load this. Wow, yeah, this was a good long setup that I missed. We can go over it. All right, I got your screen right now and ready. This is Victor's screen,
Thank you.
so we could see it really quick.
Sure. All right, so let's see what we're. All of this move up for you guys is, all it's all about. I mean, the driver of the market, not only the equity, the indices, on forex is no different. Oil as well. The driver right here is what's happening in the Middle East. It's the conflict that is, upfront, in our face, center here, and this whole move. I'm not sure. I do they see my screen?
Yeah, you're on live right now.
Okay. All right. Perfect. All right. So So the what we do have is a on the higher time frames, we did have the market created a bearish order block on the monthly. I know it's you guys future traders are on the minutes, they want the action, but call me old school or not, but in order to understand the day and where we're going likely for the next move on even the couple of hours, it's important to understand where we're coming from, right? The higher time frame, to understand where we are within a context and have that panoramic view of what's happening around us and where we are in on the bigger picture of things. So on the higher time frame, we did create that uh, know, recent top. In NQ, we created a bearish monthly. That means that on the higher time frame, on this time frame, this is the weekly, but on the monthly, we can expect price to either come back to retest it, or not, but eventually to be going to that direction. It seems that is the next level, which is most obvious to go either with or without a retest. To go to the weekly, we do have a weekly order block that was created below us. That is where price is likely, if we're going to have a retrace and go into, we're going to be likely, you'll see that work as a magnet as price comes in. And as it reacts out of these order blocks, you can get the idea, get the indication, the cue whether or not the market is going to continue higher or not, right? If it is going to continue higher, you should see some kind of reaction off of these uh, upper border, and as it pierces deeper into that order block, that bullish order block. So that's the weekly, and if we go to the daily, we can actually see a quasi which has been created recently on the daily time frame, and this is quite significant, right? Quasis are elaborate head and shoulder, and they much more so than a simple double bottom. They need a lot of things to happen, or not a lot, but more so than a simple price action pattern. And we did create that established downtrend. We broke the neckline right here, and that gives us two possible areas where we can expect, if price is going to reverse, if this is going to happen, which we never know in advance, but if it's going to happen, then you would want to watch what price does in this level, because these are the upfront, the likely places that price is likely going to be reacting on, and have that reversal into the higher time frame goal that we, or aim that we just mentioned before. We're not there yet, so it's not very relevant for today yet, but these are the levels you want to be watching for the next couple of days. On the H4, as we go through the time frames, you can see the gap. Dave mentioned that at the beginning we had that weekend gap. On It's also on euro dollar, and we are closing that gap as we speak. And because this is the collapse of the talks that created that gap, you know, the more the better the prospect become, the more you will see these kind of reactions. All of this was basically the market getting ready and getting these new, positive news of a possible ceasefire,
Yep.
and talks going to happen at some time, which indeed happened last weekend. So this is the H4. Do we have something that we could be traded? Well, there was an hourly earlier. There was an hourly quasi, which is this area. I'll show you guys. This is the hourly quasi. It's an internal quasi, not the external. That's the head of the external quasi. Went all the way up here, and price came back to the possible entry order block on the quasi, and bounces off. That's the pattern that we're looking for. Yes, it did squeeze the head, so this did go lower than the head, but that's fine as long as it doesn't close below it. This is still a quasi that is valid, and you can see actually how beautiful the market moved away from it, confirming and you see that all the time, confirming the structure held, even though it was squeezed in the early hours of on Sunday. So on H4, I did have a structure here, and you can see how beautifully price came back and retested it. Um, that's on the H4. If you go to the H1 as well, you can see that this is a fresh order block, and actually it's a much bigger area because it's all overlapping structures. And you can see that within 10 bars, price comes back. Look at that lower wick. That's where you want to be getting into the action. And price moved away from it very, very. You can look for possible very quickly. I was going to say, if we mark this as the area, we can find possible entry. This is, of course, price already did it, but you can use this template, this pattern, because it's in all assets, in all time frame, it repeats itself very, very often. And once you have the sequence, you can do this by yourself. You don't needing watching any masked trader on any YouTube. Although we want you to come in and keep on liking the stream
Yes,
and
indeed.
sharing
Remember
with
to
us.
like, guys
But
and gals.
however, you can while you're watching us, you can perform your own quasi analysis and trades. So this is the this is the 5 minute, and let's mark that as such. And I don't know if this is live. So
Market
that would
has
be
just
the
opened, by the way, 2 minutes ago.
nice.
Yep.
You're getting ready. Your
I'm
finger
watching.
ready on the trigger.
No, I'm being very calm. I had a good session. Was it Friday? Trading CPI. I caught actually. I was showcasing how you could trade the actual news. So during the
Uh
news,
huh.
not only because you're able to do it on the fivers, but when you have a thesis, I like to put my money where my mouth is. So in a split second, we got a trade executed and caught some other nice moves after CPI. So that was good. But I'm usually when I have a good session, I need to calm down because I'll have a bad session the next day. So, experience has taught me that, hey, if you have a great day, relax the next day, calm down, wait for your setup. So that's what we're doing right now. We're waiting for at least the first 15 minutes to go by and to see what kind of setups we can find, especially that the initial move has already happened, so we need some digestion to happen first before we can actually take some trades. But I like what you're
Right.
looking at, and then when you're done with that, we can zoom out again because the structure that has formed right now, that recovery looks a lot like what we got back in 2025 after the tariff low. So when you're done, maybe we could take a look at that as
Sure.
reference. History doesn't repeat itself, but it rhymes. So
I like that. Yes. So actually, the writings were on the walls. We could have seen this. I didn't catch this, in all honesty. But this, the quasi, since the whole process is objective, right? There's no interpretation. It's a rule-based system that can be combined with order blocks that can be applied any asset, any time frame. Um, and you can basically trade it any way you want. There's more variation to it. You can find your edge differently, different from coming from a different angle. But see what I just did. We did have an area here that was indicated by the 4 hour and on the 1 hour as well with overlap. I like that arrow. We go to the lower time frames and you can see the quasi right here. Very, very systematic, where we're looking for that established downtrend, lower highs, lower low, breaks it, comes back. Actually, that was before this area was created. It was this retest that we're looking for. Price went all the way up here, and with the fib, you can filter for certain structures that only have a certain number of entries or order blocks. In this case, it went through the first one, didn't trigger before that. They went through the second one, but also to the third one, and there was the reaction. And so basically, that is the area that price wanted to retest. and you can see if you were on the lower time frame, you could have seen what the market did when it hit that order block, and you can see that big spike,
Yep.
that big order block, and it comes back for the retest, right? This is what I like, because you can, the fractal nature of it, you can go to the 1 minute and find as it comes back to retest, get your entry there, stop below there, or below the 5 minute structure, or below the hourly, whichever aggressive or conservative you want to be, and you let that thing run as far as you can hold.
Indeed,
Actually, the
indeed.
target is here at, actually, I caught a 14-hour trade on,
Oof.
yeah, that was,
Nice.
I think it was on Friday. Maybe it was Thursday. I'm not too sure, but maybe I have it here, but we'll come back to that later. You wanted to show something on the market. Let's see. Let's mark the open, since we have the opening happened here. So currently, what's the range? That's the high, and we're still, defining the low. We're gonna be looking at, confirming and observing what price is gonna be doing with that opening range. For all of those who trade the opening range, right? It's very, very popular strategy out there. Timeless, because
Hmm.
there's always going to be an opening range, and it is sometimes, more often than not, it is indicative of the sentiment of where market wants to go, the collective group. It's price action at its finest. So it's and it doesn't go out of fashion.
Indeed. The opening range is something I trade a lot. Use it as a reference
Really,
for my trades to take, measured moves, types of entries. The most basic setup is that the ORBs, like they like to call it, the opening range breakout, where you find the opening range and then you're entering long or short wherever it breaks. This is I would say, level one, maybe the simplest way of trading it. Level two would probably be waiting for a break of that range and then waiting for the pullback and entering on the pullback. Level three would probably be starting to buy at the bottom of the range before the range
that's what I did.
ends. That's where you already have a bias. You kind of, know where to enter. So that would be level three. Level four would be adding a volume, so the amount of volume that's printing there to your trade. Level five would be adding other confluences, so looking at what the dollar is doing, looking at the relative strengths in the other indexes to kind of determine, okay, which asset am I going to take the trade on, or if I'm going to trade it on the NQ. I'm comparing it to other indexes to decide where to enter, and then we could just add levels to that. You're looking at other the Mag 7, for example. You're looking at market internals such as the VIX. Where's the VIX? Where's the advanced decline? So a lot of layers can be added to that level one. But like you said, opening ranges are always going to be there until we have 24-hour markets. We're always going to have an open. Um, and I think one can definitely utilize that. Now, on a higher time frame, since we're waiting for the range to form, and I really liked what you were talking about for the indexes on weekly, monthly basis. I'm gonna pull up my screen really quick. Give me just 1 second, guys. Bear with me. If I zoom out and let me put my screen up. All right, so right now this is the NQ. Let me take my lines off and the Nasdaq basically. And what we're looking at, what Victor was pointing was here. We've broken out. We had the order block, like he mentioned, and he said we could have a possible pullback eventually. And if we look at April 2025, where we kind of broke out similarly. If you looked at the second week, well, we didn't have the exact same thing. That's why I said, history repeats history rhymes, but doesn't necessarily repeat. We did get a pullback after the first week. Now, if we zoom in and we look at the 4 hour chart and we look at that as a reference, let me go back into that 2025. You could see that, after we had that huge up move there, we had a pretty significant period of pullbacks. So this is, yeah, about 11 days of kind of sideways consolidation and moving back. So just to say that, to confirm what Victor is saying, is that okay? We were moving down. Now we've broken out. Keep in mind that this might not be just a straight way to the upside, giving all of that uncertainty. We might see sideways action. We might see pullbacks. That's basically what I wanted to point out on the higher time frames for all the guys and gals looking at us right now.
Yes. So you think you're favoring a possible continuation and not all too. You think this could be the beginning of another run up?
Honestly, I'm keeping all options open. I don't have a bias. I don't. I really. If there's one thing I know, is that I have no idea what's going to happen next. I could not have predicted that we were going to have a blockade on top of the blockade. I could not predict that we were going to have a war with Iran. I couldn't predict any of these things. Um, you know how, I always say it. I always have a bullish, a bearish, and a neutral scenario for all of my trading, whether it's short term,
Mm,
mid-term, or long term. I just want us to keep in mind that right now anything is possible. It's not a
mm,
keep in mind that the market is forward looking. So if the market is thinking, well, news is going to get positive, we're going to have that push up, but eventually that push has to slow down, and catch up. And strictly on a technical level, if we were to continue to push up, we definitely have room uh on the Nasdaq at those, $26,000 levels for a lot of pushback, a lot of, at least on the strictly technicals, looking at the technicals, there was a lot of distribution up there. So we could hit that wall there and pull back. Same thing if you switch to the ES, that corresponds to that, key $7,000 level. So even if we continue to push up, I expect us to traders to take profit at a certain point, and for us to pull back. So it just aligns with what you've mentioned. Maybe it might happen a little bit later. We have that push up and we have that pullback a little bit later, but we don't know. I'm just telling everybody, keep an open mind, and we'll see. We'll see what happens. Let me bring your swing back up.
yes. I think indeed, if we look at the speed of the last couple of days, this is the daily, right? Getting that bird's eye view of what the market has been doing. Actually, let me take off these numbers so we can see it better. We can clearly see. It's sometimes we overcomplicate things, right? As traders, right? We try to find, you know, look much deeper while it is right here in our face. If you look
Yep,
at just the price action, you can see that it has been before a couple of months ago. It has been going sideways, not really directional. Right before that, before we had a top, yes, it did. So there was consolidation, but price wasn't really. It seemed like price was waiting for signals, right? For more
definitely.
data, whatever it was waiting. You can see how it was bouncing off of this is the 200 EMA, the blue one is the 50 EMA. I'm not sure if it's visible on the chart. Um, but it tells us in very simple terms. I mean, EMA is just very simple to comprehend. It tells us where we are. The market broke the 200, which is quite significant on the daily time frame, and we recouped that level, and that's going to be one of the signs. How deep are we going to go? Are we going to break it back or not? If we are, then the doors are open, or the windows, whichever it is going to use to continue to go higher, for it to do so. However, that's one thing, right? So the very a very consolidative period, but you can see clearly from this point that it wasn't, this was decisive. This was a lot of directional movement, unlike the consolidation we had before. And if we can go into the lower time frames to see if we're going to have breakouts or reversal, either using the quasi that I'm talking about, or it doesn't have to, but I mean, this on a smaller scale, you can perhaps have a reversal pattern up here, perhaps even better, touching one of the order blocks on the daily time frame. If that happens and we get a breakout, it doesn't have to be a quasi, it can be any time frame. If you have a consolidation and it breaks out, what is more likely to happen? Price is going to continue in the same fashion, maybe not as explosive, maybe a little less explosive, but it doesn't
Hmm.
matter. Still going to be explosive. You're still going to be able to catch the move all the way up to perhaps the monthly structure, or we can go to a lower time frame to find some other structure. There's an order block there, even though it's been retested. That could be an area that we'll see price go to before we get to the actual higher time frame structure. And that those are the moves, those are the singles, as in baseball, right? Those are the easier, and it
The base
doesn't look
hits,
as,
like they like to say.
yeah, base hits indeed. They're it doesn't, it doesn't draw the attention. It's not as glorious hitting you know uh a home run, or even a I haven't played baseball for a very, very long time. um it's how do you call it when all the bases are loaded?
So I haven't played baseball ever, so I'm the
Oh, okay,
worst
okay.
guy for baseball. I don't know. All bases are loaded. I'm not a baseball guy.
No, no, I mean, when you hit a home run, bases are all fully loaded. That's
Okay.
the kind of the best situation, because
Yeah.
that's what people remember good, batters for. But it's actually the base hits that will win the game, because those are the increments. Anyways, what I was trying to do is going to explain is that you gotta that's the easy low hanging fruit. The
Yep.
market has been very up, very explosive, very impulsive. You want to be on your toes to catch that next move. Even if it isn't as explosive, it's likely to have maybe 70% kind of explosiveness that it had before recently. And the only thing you have to do is watch for the reversal and preemptively perhaps get in as it pushes out, not when it already break. Maybe you can on a lower time frame. um you'll have to, decide for yourself what kind of trader you want to be and how you want to capture it. But I mean, the move is going to be there as long as it breaks out of these smaller time frame. Maybe on the hourlies, see something. We can go to the hours and see what we can see. Fine. You have the opening gap that needs to be, actually, the quasi that I just explained already has this as the target, right? But the question is, where do you get in? That was the optimal place to get in if you were awake at that time, if you're in Europe, or home if you're in the US. But you could see in, let's take a look. Actually, I like this. Look at this. So now we have, in about 11 minutes on the 4 hour, we have a outside bar that was created, right? So this order block has already been retested. It may come back to that, but usually, if you're going to have an explosive move, it's not needing that order block anymore. It's already mitigated it. It's already used its fuel, its liquidity for the move. So I don't think even this one might be revisited. But that's the next structure we might see. Perhaps, I don't know. Maybe after the closing of the gap, price might come back. Who knows? Might touch this, and you'll have something like this. For example, that's a small, relatively small in the great scheme of things. But if you, I don't have it here pointed out, so let me just zoom out here. But this would be all you need to catch, let's say, a move like this. Right? You put it down here, you target that area. It's 1 to 3. Actually, that's not really a base hit. That's a nice double, I would call that.
That's a
Um,
nice one.
but anyways,
We're
yeah,
getting
something
we're
like that
getting
would make
some
sense.
some increased action here on the indexes. I don't know if some news came
We
out
are.
or what's going on, but we are filling that gap. So very, very interesting that you were talking about these setups right here. I'm gonna get back to your
Mhm.
screen, but I just want to show everyone. what is going on right now on the live
I am
markets. And
on the 1 minute.
you are what?
I'm on the 1 minute. But go ahead.
But yeah, there we go. We are climbing. We're definitely climbing higher on the ES, on the NQ, and on everything. And then we are seeing oil just drop right now. So this is the oil chart that we were talking about this morning. I'm just giving a quick show here. Full disclosure, I am in a trade. I got in on this breakout there, just risking 1R small on that account to see if we can close that gap here, and possibly with the strength we've had and the huge volume increase to see what we're going to test. So since we were talking about opening range breakouts, well, we just broke out of the range.
Yes, and it's a beautiful one. Uh, it's a lot of you can see the price action is very aggressive. That's what you want to be seeing. You want to see the appetite of the buyers coming in, not just putting their toes in. They're jumping in. They are taking the dive. Uh, not wanting to be left behind the bandwagon.
Exactly, exactly. And we might also be seeing some shorts covering their that abrupt price action to the upside is sometimes shorts being squeezed and having to cover their positions. You know what I would love, Victor, as well, since we're talking about that is your take on gold, because I've been scratching my head a lot on gold lately, and I would really like to get your perspective on it, both in the short term. When I say short term, meaning the next few days, and medium term, maybe the next few weeks. Would love to see what you're thinking there.
Sure, let's take a look at gold. I'll use the CFD, but of course, the structures are the same for the futures market. So let's go to the higher time frame. All right. So on all the way up, I always start from the monthly. These are all structures from before, expansions and projection from before. We did create a monthly structure, which is actually something we need to pay attention to. The gold has been unstoppable. It's been a juggernaut, and is likely to continue so. But you can't ignore a monthly bearish structure. It's at least going to have some kind of a reaction to it, right? So we did have a fresh order block. We just came in and retouched that. If the market is at this month is unable to close within, we still have a lot of leg to run for this month. But if it's unable to close within, that's a clear sign that could be interpreted as a rejection of the order block. And if the microstructure and the daily and the weekly structures also are pointing bearish, that could be all you need for a much deeper pullback. So that's something you want to be looking for. There is a monthly, it doesn't mean prices needs to go down, but it changes the shift, it changes the balance, who is in control. So that's one sign. If we go to the weekly, what else do we see? Well, on the weekly time frame, actually the market on has not broken structure. That's the line, to me, the line in the sand where the structure is broken. That's significant because if you get a monthly structure that tells you that we would be going lower, at least you should see, not right away, but within a couple of bars on the weekly, you should see a weekly structure break. If it isn't, then that breaks the weight, or actually it makes the monthly signal less heavy, less you need to
Valid.
pay less relevant. Yeah, well, less relevant, I would say. It's still valid, but it's
Okay.
not as strong a signal if you don't have the weekly supporting that, because everything that happens on the monthly should is not able to be created if not the weekly and the daily. That's how the market works, right? From the lower time frame, things are built up, and
Yep.
then you can see it on the higher time frame. So the reversal or the continuation, if there's, you should see that coming as well on the weekly and the daily before the monthly actually moves away from the on the monthly time frame. So that is an indication, actually a call for everyone to go to the lower time frame, see how the market is reacting to the the monthly structure or the weekly, whatever it is that we're watching, and see if it is doing that. And if we go to the lower time frame on the weekly, for example, it hasn't broken a structure on the weekly time frame yet. That tells me that this might be a structure, might be a structure in isolation, meaning you don't want to be trading anything in isolation. You want to be having multiple time frame confirming that higher time frame, also lower time frame for the next move. It hasn't broken its structure yet. And not only that, you can see on the EMA, for example, this is the 50 EMA, price reacted beautifully from it, right?
Indeed.
That's something you want to be watching. This is not, any time frame. This is the weekly time frame. So, the weekly is talking, we got to listen. And the market created that bullish order block as it moves away, leaving that pin bar, beautiful pin bar there. So the question, I think, on the higher time frame, without going to the daily, is, are we able to continue higher? If we are, even if it goes slowly, I would think, I would assume, or I would take that as a strong indication that this was indeed something in isolation, and the market is will eventually consume it and continue higher, which on the greater scheme of things is what everyone is expecting. I'm no different. Gold is still, the case for gold to being higher is still there as it was before. And I can see price maybe consolidating, maybe retreating, but eventually going to higher levels, higher than what we have seen so far. So I'm gonna be keen. I think what is keen is to watch how it reacts as it interacts with the monthly order block, and whether and if it's and actually uh on the higher time frames you can see that the monthly is already showing a upper wick, which hasn't closed yet, so it's not very significant. But if it closes like that, you want to be watching, if it goes back to the weekly, does it have a reaction or not? If it does, that's another positive things. Then a positive sign that you from that point you can expect price to be going higher again. And the opposite is true for both of those things. If it isn't able to hold that level, it moves away from the level quickly. That's a sign. Hold your horses, because price might have more downwards potential to it. The same thing, if it doesn't react to the order block, the bullish structure on the monthly and the weekly time frame, we might be in for another deeper correction. I mean, just we don't have that information yet, so we'll have to wait for the weekly to close to see if how this if we're going to be pushing it more or not. On the daily time frame, there is a bearish structure on. There's an internal quasi on the daily. It is a daily, so you have a monthly structure, a daily structure, but we don't have anything on the weekly. So I can't say, there's alignment all the way from the monthly to the daily to say, yeah, this is a nice alignment. We are indeed, we have a good chance of having something like that happening. We can't say that because, there's a big gap of one time frame, which is the weekly missing right there. The other thing is we did create a daily, and this is maybe for the next couple of days, as you ask me. So I
Hmm.
think if you ask me on the more long term, I think eventually we're gonna be going up. I think that's likely.
We
Given
have a
how
lot of banks calling for 6,000 by end of 2026. So we'll see.
well, I don't. Well, I read those articles as well, but I don't base myself all too much on what
Of course.
you know what they say. Given the technicals, this is still strong, hasn't broken the structure, and that's all I need to know. If it hasn't broken the structure, my expectation is the price is going to continue um continue to go up. The question is what's going to be happening between now and that moment that it's going to continue on its path upwards. And I would say it's kind of we don't have enough information yet to say anything, because we created a bullish structure on the weekly below, hasn't been retested yet. That's information we still need. We got to the monthly above us, but it's a monthly, so you have to wait for it to close to see how it reacts. Um, so we're having like on both scenarios, we are still missing some key information, some key reactions from the market. And if you go to the daily, we did have a fresh daily order block, which may be indicative of what's going to happen the next couple of days, maybe the rest of the week. We were unable to close above it. That's
Yeah.
that's significant.
That's significant. That is significant. I wonder if there's a lot of things going on with gold. First thing we have to consider is we have this huge, massive run up, and we shouldn't discount that because we need to consider, and that's what I've tried to kind of put my brain there. Is like, okay, if we didn't have this backdrop of war, if we didn't have everything that was going on, in the world, how would gold be reacting? Would gold be, digesting this move and waiting and rebuilding, waiting to coil to go back up? Or would it be kind of a Bitcoin situation where this was just a quick pullback and then we would just be blowing, retesting those highs very shortly after because FOMO would be setting in? And I've come to the conclusion that because we had such a massive run up, whether we had the backdrop of war or not, we would be at the moment digesting. So I think we would be neutral or bullish. And then now you add the war. So I think for the foreseeable future, we are going to see a lot of digestion on gold, but a gradual move to the upside. And I have to say, the slower the move to the upside, the more bullish it is, in my opinion, because slow movements can last for a very, very long time, at least based on my experience. So I like your point of views. At least in the short term, though, for the next few days, we might see some little pullbacks. People need to sit in cash to redeploy.
Yes, totally. The fact that we didn't close above that daily, um, yes, the fact that we didn't close above that, um, we did have on three different occasions. The first one was the best chance we had, and it was
Yep,
unable to do that. And the second one, we barely were able to come above that area.
indeed.
And on the third one, we never even reached that. That tells you a pattern. That's very clear to me. It's getting weaker and weaker, and
Yep,
now it happened that there was that gap. We didn't see that gap coming. Of course, you can't see those gaps always coming. And the to me, what is important is, can we see on the lower time frame a reaction, maybe a quasi something else of this order block? Because if we are, then the likely place for price to go is to the next. Actually, already hit the next order block, but is to go back to that area and possibly go a little bit deeper and possibly break the order
retested.
block.
Yeah.
That's one thing that I'm looking for, and it's very simple. And if we're not creating reversal patterns, we're not slowing down, we're not decelerating, it means that we're going to be retesting those highs, and we're going to be needing to see, you know, are we in a different position? Are the buyers more eager to buy instead of as they were before? Are we able to close above? If we are, that's extra fuel, that's extra evidence for the buyers or for the market basically to say, okay, we can continue to go up, and I don't see anything in between. So actually, we have a good space here all the way to 5100.8
My
that is
inflection
on.
point.
That's your inflection point.
That's my inflection point. Ever since we've been
Nice,
talking,
nice.
5100 has always been the level for me. So it's nice that it lines up with what you're talking about here.
So those are the two scenarios basically. And either we create a structure here that will be in alignment with what we already seeing here on the price action. Price action is telling us this is weak. We create a
Hmm.
bearish structure, we come back, we were unable to close above it to break it. So we're obviously we're going to be going lower. And actually there is a nice bullish run that we saw. Same thing as with the Nasdaq. You can see how the market, after the gap, went to that daily order block, and then move quickly away from it. That's what you want to be. We regained that 200 on the hourly. That's what you want to be seeing, because we did have, a nice reaction here on, and that push up, that was for the ceasefire. So it's, there's argument for both sides for price to continue, at least on the lower time frame. I can see price pushing higher, right? The question is, what will it do there?
Yeah.
Can we continue? Then, I can see us going all the way to that 5100. But if you're gonna be seeing hesitation, trepidation, then we're likely gonna be retesting this, and who knows, maybe even lower.
Maybe even
Uh,
lower. Yeah.
that's I think that's my take. And on the bigger picture, it all depends on, you know how we, if we go back to this weekly order block, how we behave there. Are we basing
Hmm.
and breaking out all the time, even if it doesn't, have follow through, great follow through? If we're just breaking out a couple of times, that already tells you, they're ready to run again, and it's only going to be a matter of time that one of those breakouts is going to really run, and you can see the market get back into the same mojo it had before.
Indeed, indeed. We're gonna see. Looking at it on the weekly time frame. If we are to push back to the lower end of the range, there is a lot of liquidity there because of the speed at which we moved from it. Of course, there was a lot of bullishness and probably profit taking for the shorts there that kind of fueled that move. But if we do push back to the downside, there is a lot of liquidity there. So hopefully we find a base there for the bulls, and we'll see what happens. But I really like your take there. Different scenarios, and I definitely agree with the point that, at least on the daily, we haven't seen that strength there. We've seen a lot of rejection on gold. So if I was a betting man right now, I would be 60-40 on maybe pulling back first and then pushing back up. So we'll see. I just want to say a quick hello. We have Stefan in the house as usual. Good to see you here, Stefan. We have Tay Keith. How you doing? How you doing? Good to have you in the house. I have the man, Mr. Market Structure, in the house today. I'm really, really happy to be getting his takes. So I just want to touch really quick on the setup that happened this morning on the indexes. So I'm going to share my screen really quick. We were talking about opening ranges and opening range breakouts. And let's just take a quick look at this here. So we opened here at 9:30. We had the opening range. Whoops, sorry. I'm gonna make
Are
you
you sho-
sorry,
are you
what?
showing your are you showing your screen? Okay.
Yes, I'm showing it now. Sorry. Thanks for reminding me. Often I see, you have the preview screen. A lot of times I'm looking at the preview and I don't realize that I'm not live. But we'll get better with time, guys. So we had the opening range. So this was our range on the ES. Yeah, and while I was talking to Victor, I saw that, hey, we are literally breaking out of that range. So I took my first entry there. We were talking about different levels of setups. This is the most basic one. You have your range, you see it breaking out, you have the increase of volume, so you enter there. Now you can risk the low of that range for a short time frame trade. I'm risking very, very little here, so my stop is way down there because I was considering to add on this to this position and gradually adjust my risk. But I was paying so much attention to Victor that I missed the ad, and the ad was here. We talked about breaking, pulling back. So break out of the range, we pull back, and then we continue higher. Now, if we measure, and the structure is kind of changing on me right now, but we'll take a look at that in a few. If we measure, if I'm a betting man, I would say this is practically, yeah, this is a very similar distance to here. So we had a move, at least on the ES, of about 10 points. And to the upside, we got us about 12 to 13 points. So this could have been a logical take profit area, which is why we're seeing the pullback. And then you could have re-entered here for another move up. And if we measure again, this will probably be 1.5 times the range. or close to 2 times the range. There you go. So a pullback here, and you're exiting here. Now, sometimes on a trend day, you will continue and trend and get 3 or 4 times that range. So we'll see what happens today. But this was your opening range breakout setup that you could have taken this morning, either entering here, exiting here for a quick 2 minute trade, or doing a partial here, waiting for the pullback, entering and entering here. Now, there are ways where you could have started scaling in from the bottom here. But that would be a different setup. But opening range breakout, there you go. We got one today. We're still holding, but the structure of price is starting to change right now, because we are kind of diverting from the trend. We've done two, if I could call them, standard deviations above. So I'll wait to see if we can get a third push up and exit out of my trade and reevaluate for another setup. I just want to see what price does.
Yes. Actually, you were talking about the opening ranges and different levels. You clearly have been trading the orb strategy for some time, to have the nuance in the difficulties of the different types of orbs. Um, you mentioned using different indicators or different confluences to get into the trade, or perhaps hold the trade, or to influence your trading decisions. What are the, if I may, what are the things that you look for when you want extra confluence? I mean, what are you using? Are we talking about indicators? Are you looking at liquidity? Are you looking at something on the price action? What is it that what kind of things do you look for?
Sure. We can go step by step. So what I'll do is just layer everything on top of each other. This way
Mhm.
you can see, from the most basic thing, and then I'll gradually go up to other stuff. So what I just mentioned here is the most basic level. Is Let me just turn this off. Let me turn volume off. So at the most basic level, to take an opening range breakout, you would be only looking at candles, whether you trade it on a 1 minute, a 5 minute time frame, whatever matters for you.
Mhm.
For my personal consideration, I'm considering the first 15 minutes of the open. Some people do 30, some people do an hour, depends on whatever you trade. At least for the purposes of the live, we have to do a shorter time frame. Otherwise, you won't. If I do a 2 hour opening range, we'll never see me take a trade. So we're doing the first 15 minutes, and layer one is you're just looking at the candle, waiting for it to break, entering, and then taking a measured move, right? Level two would be you're still looking at the candles, but instead of just entering on the break, you're waiting for a pullback to either enter the trade or scale into the trade. Now, this is a good pullback because it never really touched the opening of the range, which means you're getting. I had an old uh, prop firm guy who used to say, if you're unable to get your price and you have to buy higher, it's a good sign, because it's a sign that things are more bullish than you might think. So that would be level two, and we're still only looking at candles. Now, an extra, this is just entry. An extra layer to that is you're looking at the volume. So basically, sorry. Um, where is it? Where is it? Where is it? Financial volume. So you're looking at how many transactions are happening. So what you want to see, and this is probably what happened, is you're decreasing volume as the price is pulling back, which means less and less people are interested, right? If this was a store, you're kind of seeing customers walk out, and then all of a sudden you see a rush of customers go in the store. Well, that tells you that a lot of people are interested, and if that is happening as the volume is pushing up, well, it's confirming that this is the direction you're going to go in. Now, you want to see this after a pullback and a decrease of volume. If on the other hand you had a push up and you're seeing massive volume there and you're seeing kind of wick up, it's a sign that, well, actually no, we're going to turn, because that's kind of people rushing out of the store. Now, an added layer to that is you're not only looking at one asset, you're looking at multiple assets. So we could be looking at the ES and the Nasdaq side by side. So I'm going to pull up trading view here. One sec. Connect, and then we could put two assets side by side. And speaking of EAs, I actually built an indicator with Claude to give me signals for that opening range breakout. And you could see here on the Qs, which is the Nasdaq, how well this is my trigger here. It would have entered me right there at the bottom of the range. You take profit is there, so I measured it. Re-entry here, and then the second target would be up there. So if we can't hold above this line, then my trade is invalid. So you can program this, guys, since we were talking about EAs. Now, let's just compare the ES, which would be on the left, and the NQ, which would be on the right. And I'm going to leave the lines so you could see the difference in the two. So what you would be doing is judging based on, well, they're too similar this morning. So let me see if I could leave the ES here and maybe pull the YM. Okay, that's a very good example. So you could see here, if we were comparing the ES to the Dow Jones, that the ideal trade would have happened on the S&P 500. Why? Because the structure is much cleaner. You see how on the Dow Jones, we struggled a bit around 10 o'clock, whereas on the ES, we pushed up. So that would be another layer, is as you're watching the price action build, what looks cleaner? So here on the 5-minute chart, sorry, let me put that's a 5-minute. That's why it's so different. Still, it looks better here. So on the ES, you have a slow, controlled pullback, right? Whereas on the YM, I don't know if you could tell, but I can. It looks a little bit different, and you can see here I'm getting one clean trigger on the ES, while here I had an initial, I could call it false alarm, even though it continued higher. But I'm getting 1-2 triggers here, which tells me that, okay, this is not as clean as this. So in terms of relative strength, the ES would be stronger. So you would be comparing the assets. And what you would see sometimes is, let's say you would have the Nasdaq, the ES, and the Russell 2000, so the small caps, moving sideways, and then you have the YM moving down. Well, that tells you that, okay, maybe the Dow is telling the truth and the other ones are going to prepare to move down. Or it could be the opposite. You have the ES, the Nasdaq moving sideways, and then the Russell and the Dow taking off. Well, that is kind of a leading indicator, and we did it live the other day, where these two are telling you what's going to happen and you still have time to answer. So that's another added layer. Should I continue, because there are more layers, or am I
Go
blabbering
ahead.
too
I'm
much?
all ears. We are we never stop learning. So go ahead. Please
All right.
do.
And then you could add other layers. So you could be looking at the dollar. So now I'm comparing as you're preparing to take the trade. So we see here at 10 o'clock, the ES pushed up. What happened on the dollar? Well, the dollar showed weakness. So dollar goes down, indexes go up, right? So you could add that as another confluence. And it doesn't show up here, and it's hard to look at all those things in tandem, but I do have this indicator that I worked on with Daniel that shows you all these things. You have all the assets, and it's showing you strength, and then you have the dollar, and you could also look at oil
So it will
and
have like a
compare.
matrix. It will have like a matrix and a scoring system where it
Yeah, exactly.
scores how many are aligning with that idea.
Exactly. And
Nice, nice.
and I'm gonna show you like a all-time best setup in a few that happened on the Nasdaq, where it really takes off and never stops. And these are days where you can make 10R or plus in a day. And then the last thing is market internals that you can look at. So market internals is, how is the overall market doing? Why do you want to look at stocks? Why do you want to look at the market overall? Well, you're trading the indexes. You're trading the S&P 500. We have 500 stocks in there. You're trading the Nasdaq, the 100 tech stocks. So maybe you want to look at the tech sector. You're trading the Dow that only has 30 assets. It's easier to manipulate, quote unquote, but it's still a relevant indicator. But you want to look at, okay, what are the Mag 7 doing? What is Nvidia doing? Guess what? Nvidia is taking off. You could have taken the same setup on Nvidia. You want to look at Apple. Well, Apple is kind of pulling back. So let's say you had those seven, both Nvidia, Apple, Tesla, Microsoft, Amazon. Most of them are either moving sideways, apart from Tesla, who's really pulling back, Broadcom, sideways or up. And then when I say market internals, sorry, I skipped over that. You want to look, okay, what is the VIX, basically the volatility index of the S&P. If volatility is very high, so I would say above 20, so we're at 25, 30, well, it's increased volatility, but maybe to the downside. So you want to be careful there. But if you're in the 20s like we are today or lower, maybe at 17, which is ideal, your longs are confirmed. Then you want to look at advanced decline. So how many in the total? 8,000, I think it is now. 8,000 stocks. Out of those 8,000s, how many are advancing? How many are declining? And to put it simply, this checks it, and it's simply you can look at it on TradingView. Um, it's how many stocks advancing minus the declining ones in it. If it's ticking green, we're advancing. If it's ticking red, it's very simple. Same thing for the tick chart, and same thing for the Volt ratio. So Volt is volume. So what we want to know is there a crowd? Is that crowd pushing the price up or pulling it back? Or is there not a crowd? There's nobody there, and nothing's really happening with the that's the Volt ratio. So how much transactions are happening? So a lot of layers there, and then the last layer, which I can't show really, is what's happening while you're trading. So you're looking at the time in sales to see, okay, how fast are the green prints happening? If you use Bookmap or one of those things, you can look at key levels, but that's just adding more complexity to it. You don't need to do all these things. So these are things that sometimes I'll look at all of them. Sometimes I'll just look at some of them. But you could start with the basic, just the basic candles, practice that, and then gradually add layers onto it. And once you start trading it, then you'll know what to look for. So for example, let's say you scaled in and then you go look at all these things. They will confirm, should I add to my trade? Should I hold it for longer, et cetera, et cetera. So yeah, a lot of
Nice.
information there, but yeah.
And you stack all of these things on top of each other?
Yes, I'm stacking. So at level one is, am I seeing the pattern? Well, of course, prior to that, you have your preparation. So I've done what you've done, which is we've zoomed out, we've looked at the market on a monthly, weekly, daily, 4 hour, whatever higher time frame you use for the time frame you trade, and you're looking at, okay, what is the higher time frame saying, and does that align with what I'm seeing on the lower time frames? All
Market
right, I'm gonna get
reacting
out
as
of
we
the
talk here?
trade.
Yeah,
Yeah, I'm gonna
market
get out.
reacted here.
So you see, this is what I'm talking about, volume. You see how the volume here is visibly climbing? If I leave this on there, it'll tell us. So we're seeing 2,900 trades, 298 million in financial volume. So it's just climbing, 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 climbing. Now, this might just be buyers and sellers fighting it off, and then we're moving up, but this might just be a tweet as well. So since I'm
I
talking,
breaking news I see here on
there we go.
Financial Juice. I'm not sure if it is how
Oh,
recent it
home
is, but
sales.
probably it is. Is
Oh
it?
no, that was 22 minutes ago. Sorry. Sorry. Yeah.
No, the Iranian officials, I don't know if this is just happening or if this has been on the screen for some time already.
Uh-huh.
Now I'm reloading it and it's not showing. But let's see if I can find it. There, that was actually no, that was some time ago as well. I thought it was
Oh yeah.
popping big numbers on my screen. I thought, it was the issue that is the event that is happening
No,
on
it's a Trump tweet. I got it. 22 seconds ago. Trump on Truth Social saying that Iran's navy is laying at the bottom of the sea, completely obliterated 158 ships. What we have not hit are their small number of what they called fast attack ships. Anyways, so he just tweeted, and that's what's happening.
It's the yeah, okay, all right. So it's numbers. It's his tweet as usual. No? That's how we know from his first time in the White House as well.
Yeah.
At all hours of the day, you can expect some watching your Twitter feed. No, no longer Twitter, but I mean back then. I
I
think back
just
then it
still
wasn't
call it
Twitter, and
Twitter. I like the name. X is just weird for me.
it became a very profitable addition to your things you do normally. Social media isn't gonna help you too much. It's gonna distract you more than anything. But watching Trump's tweet is particularly profitable, or at least it can help you get out of trades if you're in the opposite direction.
Indeed, indeed, indeed.
Um, we have I didn't mention it actually, but there is also about 33 minutes ago, actually, 28 minutes ago, Iranian officials are studying abandoning uranium enrichment. That's the kind of news that we want to be.
Mm,
Let me put it. Maybe you can put my screen on for
yes,
just a little bit.
you're
Right
live.
here. I don't know if I can make it as big as possible, but this is the kind of headlines that you want to be that's going to be move the market, right? If
Indeed.
if Iran is inching, they're not going to be saying yes, I abide to all your rules, Mr. Trump. They're not going to say that. So it's gonna be something subtle, but they
Yep.
might say something like, we're looking into coming back to the table,
Yep.
or something of a tone that is not as defiant as sometimes many times they have been, and saying the tone. I mean, you read through the lines. This is something studying. They're not there yet. Abandoning, that's a strong word. Uranium enrichment, that's the kind of things that will you need to be watching for the market to know which direction it's going to be moving, and likely, and if there's another news coming out right after, meaning if it's a negative thing, or maybe this is not maybe this is a positive one.
This
So
is
right,
positive, and you
if
could see it on the chart. It actually came out. I just checked the timestamp at 9:48, and if you put your
there you go.
your
Yes,
cursor at 9:48, you can see it. It's clear as day on the market. Like we took off.
yeah, that's the actually the timestamp is 53.
Oh,
uh
53. So the next one.
yeah, it was this
Okay.
move, or maybe the time, market move before this was posted. I'm not too sure, but in any case, this is the driver. If you can understand what's driving the market and you know what to look for, you can trade that move. And of course, I'm not a fundamental guy, so I'm not gonna be making my decisions based on what I see. I'm gonna be making my decisions based on what I see on the charts. But this can help you understand: is this going to be a little breakout, or are we really talking about something significant here coming up? You can put back your chart if you were in the middle of
Yeah, no problem. I'm gonna put it back. Oh, sorry. Yeah, well, we got scared for nothing there because we're pulling back. But I'll see if I can get another setup later on in the day. But we had a pretty decent, pretty clean opening range breakout today, so I'm glad it happened and we were able to, at least take some of it. And we had a similar setup happen here on the Nasdaq, and let me see how if it was cleaner or how much cleaner it was. So basically, showing you the setup again, you would measure at 9:30. Where's 9:30? 9:30 is right there. So you would measure your range. I'll go on a smaller, sorry, time frame. So on the 1 minute to be able to see, so 9:45 is right there. And basically what you're trying to do on the very, very basic level, and actually the retest was better and cleaner on the Nasdaq, you are looking to enter on the break, wait for it to pull back, add, or actually take your entry there. For more experienced trader, you could start scaling in down there, but that would be a little bit trickier to do for newer traders. And you could have multiple targets. Your first target could be the first similar distance from the bottom of this range to here and from here to here. So you're taking your first exit here and waiting to see, okay, can we continue to push higher? Now, the interesting thing we need to point out when it comes to this setup is also the half point of these ranges. So about here, and then if we go higher, about here, because things, as human nature, we will react to these half points. The other day with Steve, we were talking about how, when you get 50% off, you will have people rushing in the store and things. And we could see that here we are holding exactly above this half point. So that becomes your line in the sand. As long as we hold above this, and I could enter another trade here. As long as we hold above this, and I could risk these previous lows, we could continue to go and test out these levels. Now, it's good for you to know your range during the average day, to know, okay, how much have we moved so far? On the NQ, we've moved 167 points. Average day these days, we can move 200 plus 350 points. So you could still get another 100 points out of this. So you could try a second trade there. It's entirely possible. As a matter of fact, I'll just do it live for the fans. We're risking the low here. We might get another pullback because we are at a point where this could be tested. But I'll just enter here, targeting these highs, and we'll see if it happens. If it doesn't happen, it's fine. It's just a 1 hour loss. We'll reevaluate and take another trade.
Nice. Very, very
So
nice.
yeah,
The euro dollar as well is breaking out, and it's all actually very, very clean. We're closing the gap, the weekend gap that we had, and we are, pushing forward.
I'm
Maybe
pulling
I
up your
can show
screen.
my, yes, there you go. On the higher time frames, right? There are a couple of things we can see, right? We're coming from a weekly structure, and we are heading towards we don't have a weekly valid structure. This is a invalidated, but it switched. It was a bullish structure, was taken out, and because we don't have anything else, this is the best area if we're targeting the very best, the next best area to be looking for an indication, not a trade, but indication as to what is the market reacting to, and where are we going to. So that's the weekly. It's above us. We haven't reached that yet, and you can see that on the daily time frame. Actually, we have been reacting above a level that we have been reacting quite nicely from before, and you can see how the market breaks out of it on a multiple occasion, right? Before we actually last week, we had difficulty claiming that level. We came back, reacted. You can see that bearish engulfing price went back and uh, uh, played with that lower level at 116.66, and that's where we came back. That's also a order block on, you can see right here. Actually, let me put it down because you can see how beautifully these order blocks work. Right, you can see how the market comes back and retests that 1 hour order block. That's such a beauty of a thing whenever I see that. But the market on the lower time frames, you can see that it comes back to this level, right? This level has been reacted many, many times. And you can see if you go to the lower time frames, you can actually read price action, um, see what the market is doing with this level. See that it almost could get it, couldn't really touch it. then it actually makes an effort, but couldn't the first time. The second time it breaks out of it, comes back to retest it from above, plays a little breakdown that doesn't really hold, and before it actually leaves to continue, it comes back to retest it one last time before it continue higher. That's beautiful price action telling us, that's the line that you want to be looking for. Um, and you normally either you catch it on the very last level, but sometimes if you wait for this last task, it doesn't always happen. So you'll likely be getting in somewhere before, and when it happened this, you might get scared only to see price going your direction and you're left outside. So you gotta have you got to understand how where do you put, and this is the reason also why you shouldn't be putting your stop to break even too quickly, because the market comes
Hmm.
back, retest the same level, not to break the situation or the setup, just to retest one last time, test the buyers there, and then taps into that fuel, that rocket fuel, and then goes up in a in a bonanza kind of a way. Um, but yeah, I like that when you see that how clear, how technical the market is with these levels. And without using EMAs, without using actually this is without using order blocks, just using the levels we see here. So it's that's EU breaking out on NQ as well. We didn't come back to retest the order block, not the order block, the opening range, the small one. This is the 15-minute, and that's the lower range of the 30 minutes. Obviously, that's also the high of that level. Maybe let me put it in so you guys can see that. It's There we go. So that's the smaller range. That's the 30 minutes, and the wider one is that's the 50-minute. I mean, and the wider one is the 30-minute. So you want to be seeing how price react to them. You can see how for example, right there, it's too early to say that it's going to close like that. Still 7 minutes. A lot can happen in 7 minutes, especially on NQ. But if it closes like this, that will indicate that the market is contained by that range, at least so far. It means that we're going to be going to lower time frames. If we go to the 1 minute, we can see what is likely to be retested before we try again and see. So we have one um, uh, 5 minute here. That's one thing you want to be looking for. And this has already been retested. See that there? Right? So we're gonna be looking. You can understand how the market creates these structures and comes back to them, what it is. What script is it following? Is it still following the buy script, the buyers, the bull script, or has it changed? Whether it breaks and holds and reacts to this level will tell you all you need to know. And it isn't black and white. Sometimes it will break one but not all of them, or will just break them and create bullish structures from a lower level, which is also very valid. And actually, I mentioned that I was gonna show you guys a 14 hour trade, or maybe
Yes, please. I forgot about that
yeah,
one.
yeah. Let's take a look at that. So that was on the NQ, and let's see, was this trade we had right here. The market we had the let's see, the higher time frames. There we go. That was the trade. On the high time frame, we created the opening range. We broke out of it. This was the high of that opening range. And we came back into the 5 minute quasi, which we had here. Let me see if I can find it. There. And I'm combining here, the range, the opening range, with order blocks and quasis, meaning I'm putting in my tools that I normally use on forex,
Mhm.
for the futures as well. And I got in on this quasi, which was uh this is the neckline on the 5 minute right here, and you can see the quasi was this. The market pushed away from it, And this is the open at 15, right? So that's the
Mm-hmm.
open right there. So let's mark that. So you have, this is the opening range, actually, not the one that I indicated here. I thought that was it, but that's the neckline on a higher level. And let me go back and mark the opening range for the 15, so we can have the, as it was when price opened. So this is the opening range of the 50-minute. That's the candle. And of course, you have the, right. So I was
Mm-hmm.
looking already, because of the higher time frames and because of how the market was moving. I was looking for the continuation where we had before
Nice.
a huge move up, and
Huge
I was
impulse. Yeah.
expecting price to come back and retest. We had a base forming, and the opening range actually was tricky because it kind of failed, right? It
Mm-hmm.
actually broke down. If we go to the 15-minute, you can see how the market actually, this was the opening range, right? So this is not the order block, but this is the opening range. That's the opening range. Let me change that to something that is more visible on a different time frame. Let me see if I can put something here. So it's not a daily, that's the opening range. So actually it broke the opening range,
Mm-hmm.
thinking that's against what I was expecting, right? I was expecting price to continue much further, but it broke it. However, how many times have we seen the market trick us thinking's one thing, right? Go for that liquidity, go for that low or that high, only to go into the opposite direction, right? And
Indeed.
I was seeing that the market is going down, but did it really break the quasi? To me, that was what was important. And the market came in on the 5 minute, and it went actually, it squeezed that area quite heavily. Normally, I would you can see it here, right? It came in, and there is technically, let me mark it on the quasi on the lower time frame so you guys can see it. This is the neckline, and we went all the way up here, and there was a 50-minute entry order block. I think I used the, not the structure, the quasi that I used was on the 50-minute, and price came in and was unable to have follow through below the area. So it was a
Nice.
50-minute quasi, and if the market already broke the order or opening range,
Mm-hmm.
and it already multiple times went below the area the structure was supposed to hold it, which is this structure. Not putting it very tight here, but this was the level they was supposed to hold, and it failed at holding that. Once I saw that, we had a one pullback again on the, this was on the 1 minute where I got in,
I like
and
it.
I
I like
held
when
that.
you trade those lower time frames.
So this is what I saw, and let me get it here. There you go. And
Yep.
so the market came in and created this. This was, to me, on the 1 minute. To me, it was supposed to continue go down completely. You have one big candle, even if it's on the 1 minute, you can see that it's a huge candle, a
Mm-hmm.
relatively huge candle, a large candle, and there's no follow through. The opposite happened. Market changed completely, and when it came back, that's when I got in, because I said,
Nice.
well, I'm gonna put my stop below here.
Mm-hmm.
If I'm wrong, I'm gonna be wrong right away. I lose 20. I had like 14 or 15. I'm not sure how many stop. I'll have to check that. Very very few stops. My stop
Mm-hmm.
was, so my entry was in here as we came back to retest that. Let me get the somewhere in there. So I went to the 15 second to get my reaction, and got in, put my stop below here. You can see now the stop is 16. I believe it might have been, well, I'm not sure, maybe a little bit above 15. But in any case, I held that all the way back, because if we if this was a fake out from the orb, I want to see if it breaks up the other side.
Yep.
If it can break, then I know we're gonna be going lower. I need to get out somewhere when it breaks structure here. and the market, I waited patiently, reacted to that 50. This was on the 1 minute, the 50 EMA broke the order block, the open range, and I said, well, in
Mm.
that moment, I'm in with that little retest here. That was the confirmation. I can relax and just let it run to the target, and it went. Let me see if it was. I believe I got out here, even though no, I did get out maybe a little bit before that, something like that.
Nice.
And
Awesome trade.
yeah,
Awesome
and
trade.
that was.
And
Go ahead.
just so I'm gonna let you finish, but it did this is, for example, a great reason why it is good if you're taking orbs on the breakout, is good to scale in or to wait for a retest. Because if you got in short there, you were getting into the wrong trade. And of course, you're not, that's if you weren't considering everything that happened before. So, for a beginner trader, this is why you have to kind of wait for, okay, what happens once we break out of the range and then that range gets retested? Because here I could clearly see that, the range, it breaks back in, gives you that pullback and continues and forms that bullish structure all the way. And this was super setup for another set of trade that I do. But I really like that. I really like that trade that you took.
All of this, of course, is with preparation because
Of
I would
course.
have never thought about going long here while the orb was breaking down. Why would you go long there? It doesn't make sense.
Yeah.
But if you have the information, that there's actually a structure that the market has been creating for a lot of hours before the
Yeah.
open, and that's the last part there. And obviously, when you enter, you don't know if it's going to react or not. That's you just have to let go and let
You have
the
to let
market
go,
play
let
out.
it happen.
That it happen, and accept the loss. You're gonna lose. I mean, this is a high risk reward ratio, so the win rate is not gonna be like 80, 70%. It's
Yeah.
gonna be lower, but that's fine because you're gonna win them. You're gonna make up for the losses when you do get these, and they will happen from time to time. So the market continued to go higher, but to me, that was all I needed to catch.
That's great. That's I really like that setup. It's very important. I'm glad you mentioned it, and I didn't really mention it when I was talking about the orb setups and whatever. That we'll call it pre-market if we're considering the New York Open, our open. That pre-market price action is very important. It's a very important caveat for you to consider when you're going to take an opening range breakout. So really, really, really nice setup here. Um, all right, so we have our trade kind of breaking down and transforming into a short setup for me. So I want to show you. This is probably one occasion for me to show Victor when I tell him I'll enter long with a short setup in mind.
Before you do so,
Oh, you
I
you have
am
to run off.
yes. Yes, yes. I'm very, very happy and glad. And finally, I'm able to join our futures channel. And it is with great satisfaction that I'm here because, as traders, we never stop learning, expanding. I'll be honest. I'm not too, it hasn't been very long that I've been trading futures. So, I mean, price action is the same, but
Yep.
the medium or through how you approach this is different, and you gotta understand the differences, the nuances between them. So I'm still on the learning side of things, but I'm very
Nice.
excited. I'm very, very excited to expand my um, assets under management. So it's yeah, I'm very, very excited. So I'm gonna be coming here often. And I
Please
hope you
do.
guys enjoy the last, these moments we were together. I'm gonna be heading off and going to the Discord on the Fivers. We're gonna have a call there in about, not too long, a couple of minutes. If anyone is interested, um, just let us know, and you'll find us in the Discord. And pretty sure that you guys are going to have the best technical analysis and following of our price action here on NQ. I mean, with Dave, you can't go wrong. So Dave, thank you very much for having me, and I'll
Thank you
gladly
so
come
much,
back
Victor.
again anytime again.
Yep.
So on that note, take care, guys, and see you guys soon again.
Thank
Bye
you.
bye.
Thank you. It was great to have you.
Thank you.
All right, guys. Well, it was great having Victor here. I just want to show that this is transforming into a possible short setup. So we got the long. So I'm going to most likely invert this trade after this candle close here. Let me just take a look at a few things really quick. Because if we don't get follow through and continuation there, then our long is invalidated. So what happened was we got the pullback. We had the news, so I was in a long, but exited the long because we didn't know what was going to happen with the tweet. Then we had that push up, so I added my first contract here in case we had a breakout of. We'll consider this the second range. That did not materialize, but you saw that I put my line in the sand there. This mid range of this level, we pulled back to here, so I added another contract around, I would say, this area. And as we were trying to break out, I added another contract there, but had in mind that we would have to retest this level. And if we could not retest and push higher with conviction, I would keep watching the price action to see if maybe this would turn into a short setup. So if in the next candles we're not able to decisively push up, then this might turn into a short. So we will see if we can get follow through, if we could get sharp continuation, go retest those highs. I'll gradually scale out of the trade. And now my risk is slowly growing shorter. We're risking these previous lows right now. So I could put my stop around here and move this stop around here. So now we're risking about 1.5 R. And as we push higher, I will gradually, manage my risk. We are about 10 minutes from 11, and we know that 11 is the London close. So that will make for some interesting price action. So our first TP would be around these highs. So I'll either X out or move my one of my TPs there. So just want to see what happens within the next few minutes. The chat is quiet right now. I am not hearing you in the chat. Let me know how your day is going. Let me know how you're trading. We had a great day today with with Victor, who is an awesome trader. So right now, as the price continues to push up, let me just pull up. I need to look at another time frame next to this. 1 second, guys. Just want to see a higher time frame to see what we're looking at. All right, so as the price pushes up, we want it to be decisive, and we will move our stop to the low of this 5-minute candle. Because if this is bullish, then we are going to get a sharp reaction up, right? And now we're risking 243. We're barely risking 1R. Let me put this in points. All right. We're barely risking 1R. So we will see if this works out or not. Right now, we are 1.5R in profits. We just want to see, can we take this high out, which would be the 50% of this range. If we can take this out and we can do it decisively, then great. If not, then the trade will be invalidated and will probably turn into a short setup. Now, when I talked about this was a possible short setup, what I wanted to say is if we got, let me make this bigger, and we're retesting those highs. So we want to see decisiveness there. I want to see volume increasing. And if we don't get all those characteristics and we get quick rejection, then the trade is not valid. Let's just get one contract out. All right, we got one contract out. So we got paid. and we are near break even right here. Because if this doesn't push up decisively, then this trade is invalidated. This should be somewhat of a short squeeze at this point. If it doesn't matter, if it doesn't happen, sorry, then that means that we have a short setup coming. And the short setup would look something like this. We would wick up, we would push down, possibly get a retest of that little trend that's been building there, and go retest those lower levels. In terms of targets, we would have this target, the pre-market high there, the beginning of the opening range, all the way down to those London highs. So many targets there. Just want to see, did we close the gap or not? We are close to closing this gap. Let me see. Actually, we did close the gap. So a pullback is expected, right? So we're just going to hold this. If it happens, then let me see something. Since we're close to 11 o'clock and we were retesting these highs, we're going to get paid again. All right, so 2 contracts out. And then the rest is just a bonus. Let's put this to $5 so we can pay for commissions. All right, so we would pay for commissions. So now we could just hold this, see what it does there, see what it does there. If it does continue, if it doesn't, then the short setup will be on. And just like I was mentioning, the short setup would be you take liquidity up there, right? If I look at my volume profile, it's probably going to be low volume node there. Give me 1 second. Volume profile. There we go. We are right at that area of low liquidity, low volume node. So there is liquidity up there, at least on the NQ, right? So if we go and take out that liquidity, do we continue to push up or do we just wick up and move back down? We will have to see what happens. So we'll see. Well, we only have 3 minutes left on the stream, so I will let this run, and I'll let you know in the Discord what happened. But let me know, guys. Let me know in the chat, what are you looking at? What did you see today? Did you catch any setups? What happened? So right now we are getting that little push up that we want. It's 3 minutes to 11. We want to see what that hourly candle will do. Our risk is right below the close of that 10 o'clock candle. So if we get continuation, then great. If not, then it is what it is. We are currently 2R in profit on this account. So let's see what we get. What I do sometimes is I'll trail it with the low of the prior 2-minute bars. So as this moves up, I'll just trail this. But since we are in profit, we've already taken 2 contracts out. We are good to just let this run if it's gonna run. And let it go retest these prior highs, which would be 2 standard deviations from this opening range. So if you were trading this today, you had, multiple chances to enter. You could have entered on the break here. You could have waited for the pullback of the opening range and entered here. You could have waited for the second pullback and entered here right as we retested those levels. You could have done the way I did, which is, I got out on this news and then I re-entered the trade, just 1 contract as we were about to break, anticipating this break, risking those prior highs, waited for a pullback, added to my position right over here while we were pulling back. And Victor was explaining how this could have aligned with a previous order block on the higher time frames. And then as we were breaking out there, added again and risking those lows. Once we broke out of the range finally, I managed my risk and took some profits at those highs. And now we are in a completely risk-free trade. Tay Keith is saying, can I go over the ORB strategy? Yes, I could go over the ORB strategy one last time right before we exit. Now, as I was telling you guys this morning, there are multiple layers to that. I'm just gonna do the first few layers for simplicity's sake. So all right, just so I can focus, let's get out of this trade right here. It'll be a 2R trade if we catch it. All right, let me just leave this here, and then I'm going to delete my lines and go over it again. Well, this is the 11 o'clock candle, and unfortunately, I'm going to probably get stopped out, and it will be a 1.5R day instead of a 2R day. But you can see how we retested this high exactly, and that's why we're selling off. All right, let me just close this. All right, well, we got barely more than 1R, unfortunately. No problem. We're green on the day, and we'll continue after. But quickly, take heed. Here is the opening range breakout strategy. Level 1 is you're only using the candles. So what you're doing is you're waiting for the first 15 minutes. Some people do 15, some people do 30. It doesn't matter. It depends on what works for you. I'll usually try to do the first 15 minutes, and you mark the high here and the low of the opening range for the first 15 minutes. So you could do that on a 15-minute bar. You go, this is the first 15-minute bar. This is the high. This is the low. And you have your range right there. And then we go to a lower time frame, the 1 minute. What you want to do, level 1, is enter your trade right as we break. Now, this is very simple, but can be dangerous. So basically, you would be entering right here and risking the low of this. So that means you're risking 81 points on the NQ to make basically a 1-to-1 or 1.5-to-1, which is a lot, right? That's not the ideal way to do it, but it's the simplest way to do it. What you can do, though, is wait for a retest of the range. So you break out of the range like this, and then you retest the high of this range. So right here, and this is where you can either add to the position you already had and or actually enter your position. This is just looking at the candles. What you want as a second layer of confluence is to look at the volume. So here on this push up, we saw increasing volume. So this would confirm that, okay, we are seeing people, quote unquote, enter the market. And on this pullback, what you want to see is decreasing volume. So you don't want to see a lot of selling. And that's what we're seeing here. We're seeing a volume decrease. And on the lowest volume bar, we could see that we reverse. And here we could see volume increasing again. So that is where you would either enter or add to your position. And once you've entered here, you can either risk the low of this candle or the low all the way down there. I would suggest risking the low of this previous candle or the middle of the range, because if it is a breakout, if it is a true breakout, it will break out and never look back, which is what it sort of did there. Now on true breakout days, this will continue and just keep making higher highs and higher lows. Now here we got a much deeper pullback, but which was pretty clean, and I'll show you. Now, once you enter here, right? Say you've entered. I'll put a circle. You've entered here on the break. You've added here on the pullback. Now you want to know, okay, what is my target? Well, all you do is you copy the range and you stack them on top of each other, and you're targeting the high of the range. So right here, your first exit would be the high right there of this range. That, if you're risking the low of the range, would be a 1-to-1 type of trade. But if you're risking the bottom here, it would be a 2-to-1 or a 3-to-1. Let's measure. So let's say you've entered here, you're risking here, which is about 37 points, and your take profit is 76 points. So that would be a 2-to-1. Now, a 3-to-1 would be the middle of the next stack, the middle of the next range, and a 4-to-1 would be the high. So on very good days, you will get, 2 standard deviations if we consider each of those blocks a standard deviation above the range. And that's kind of what we got today. Now, if I move these all the way here, and I move this all the way here, what you will see is the middle of the ranges align with the pullbacks. So let me copy this. This is the middle of this range right here, right here. This is the middle of this range, right? And you can see that after the news came out, we quickly recovered above it and buyers stepped back in right at that 50% level. And then once we tried to break out, buyers pulled back again and entered right at that 50% level. And we continued up, which is why I entered my trade. Why? We broke out, we pulled back, we held above this. We tried to break out, we pulled back, and we held above this again. So I added to my initial trade that I took for a breakout here. I anticipated the breakout. I added to this here, targeting the high there, the mid-range there, and this third point there, which is another range above. And what we got was, well, a half move above the range. And we got out for about 1.4 R. We didn't get a full 2 R like I wanted. But yeah, this is a quick view of the opening range using the candles and the volume. Now, you need to see that why we were bullish biased is because we, since the Asian market, have been pushing up, which was one check in our favor. If you look at the higher time frames, you can confirm it. And we also had a gap. And if we are quickly moving towards the gap, that means we are aiming to close the gap. And you will see that that top here aligns almost to the T with that close there, that Friday close. And once we closed the gap, we started pulling back. And now what is setting up for me is a short setup. So if we can get that short, which I was talking about, which is basically a trend line breakout, I will take that setup. So what I'm looking now, since we've done 1.5 standard deviations above, we had this trend, but we were not very aggressive in price. What I want to see is what are we going to do around this level? So once we get to the half point of this range, are we able to push higher or not? And if we're unable to push higher and we hover in this area down there, let me copy this, and we hover in this area down there, which align with this previous high where we rejected, well, that will be my short setup. And my targets will be here, once we reacted before the news, and then finally all the way down here where we pushed up from, which from this morning, which would align with the high of the opening range and the London high, this area right there. So that is a quick description of the ORB. There are many other levels to it, but it is past 11 o'clock and I have to go. So we will touch on this definitely again tomorrow and throughout this week. And I'll probably do a longer video which I'll post on our YouTube, where I'll probably give an in-depth description of all the other things you can look at possibly for the opening range. But put simply, this is one way you could trade it. All right, Take Keith, thank you very much for asking the questions. Thanks for everyone that tuned in today. I hope you remember to like, to subscribe. I hope you had a green day, and I will see you tomorrow in the markets. Same place, same time. Take care, guys.